Lena, thanks a lot for giving us your time today to be interviewed for the KPMG Review Magazine. I think, as you know, this next edition is focused on the new normal.
Yeah.
Whatever that may mean, but hopefully we'll uncover some of your thoughts about that as we go through.
Happy to do that.
And sent across to you three key sort of themes that I'd like to cover with you, which is your views on the economic outlook and business confidence, the impact of digital disruption, and then trust and sustainability as well. I think though, to start with, it'd be really great, as a founding partner and CEO of Horizon Capital, if you could just give us a few words about the firm.
Sure. So Peter, thanks a lot for this opportunity. I think this is the first time that I've been interviewed by KPMG Magazine. So I'm really looking forward to be part of the next edition. This is a critical time, not just in Ukraine, but in the world globally. But in terms of Horizon Capital is doing very well. To set the context, we're the leading private equity firm in Ukraine and Moldova, frankly, in emerging Europe. Over 850 million in assets under management. We've deployed over 750 million to date through 4 funds with a tenure of 25 years. We're in a very fortunate position because, as you know, private equity is sitting on about 1.5 trillion of dry powder. For us, the dry powder is not that high, but it's still a significant amount for Ukraine, Moldova, the countries and the companies that we invest in. So we've got about just over 100 million that we're putting to work, that we continue to put to work through this COVID-19 impacted time. And we look forward to continuing to do that this year and next year and going forward.
Well, it's always great to hear, about the successes of Horizon Capital. 100 million of dry powder, it's maybe a good time to be sitting on that, as uncertainty always breeds opportunity.
That's right.
So I think with that in mind, I mean, clearly we've seen in H1 of this year about an 11% decline in the GDP in Ukraine. I just wanted to get your perspective on what you think we're looking at in terms of economic activity in the second half of the year.
Yeah, Peter, I'm always a person who looks at things in context. And, obviously Ukraine was very well positioned starting the year, after years of crises that date back from 2014-15. We're sitting on the highest foreign currency reserves of 7 years. We had extremely low net debt to GDP, 50%, 52%. We had about just over 3% growth last year and expecting even higher growth this year. And a very strong monetary policy and a tight fiscal budget. So 2% deficit, very, very low. So frankly, Ukraine has been through that lean, getting itself in a lean and mean and getting its macroeconomic finances in order. So I think that obviously it is a health pandemic. It isn't only Ukraine. I mean, what we all went through from 2014-15 was only relating to Ukraine. And now this affects the globe. So at 11%, I look at it as relative. I look at it in the context of the global environment. I mean, if we look at, entering this year, the IMF predicted that 10 countries would have economic decline. Now we see that 170 countries are in economic decline. So when we look at 11% for Ukraine, I mean, we look at, the US and it's almost, 33%. The Eurozone, close to 20. So relatively speaking, Ukraine has had a smaller hit, despite double-digit numbers, but it's a smaller hit relative to other economies. So, and we see that really April was the bottom. April was that 16% drop, and we're seeing over 4% month-on-month increase, June, July. So relatively speaking, Ukraine is in decent shape. Obviously, the onus is on business. Business has to pull it through, and the large industrial companies have had kind of the burden put on their shoulders. But I think that Ukraine is in relatively decent shape within a global context.
Yeah, I think you're absolutely right. It's been refreshing to see that the downturn hasn't been as bad here in Ukraine as it's certainly been in the Eurozone. And as you say, I mean, the UK and US, which are over 20 and over 30% decline, so much more significant.
Yeah, and Peter, I mean, look at what we all went through. I mean, 70% devaluation. We've been through that. We've been through over 20% GDP drops. We've been through extreme currency controls. I mean, if you look at what measures the National Bank used this time, there wasn't a flight in terms of capital out of the banks. They didn't have to significantly weaken the currency in order, I mean, you know, they didn't have to try to support the currency. This is very different, and it's not just what was done, but also the extreme measures that were not necessary that people should also not forget.
And in terms of that, going back to your comment about supposed to be in a health pandemic, what do you believe the medium to long-term effects are going to be of COVID-19 on the Ukrainian economy? Particularly as we're seeing already, there's a global shift to try and move away from having supply chains linked solely to China. Do you think Ukraine has a role to play there?
Yeah, I mean, look, you know, let's talk about risks and then opportunities. I mean, obviously the short-term risks are similar in Ukraine as you see in other countries. I mean, you know that I'm also the chair of the American Chamber of Commerce in Ukraine, and we've done a number of surveys, and they're quite illuminating. I mean, when we look at right before the beginning of the year, we did a survey and business was bullish. 88% expected to increase investments, over 80% expected to hire more people, over 80% believed that the country was heading in the right direction in terms of attracting foreign investment. Of course, rule of law, 74% believed that was the biggest impediment to rule of law. To increase investment was rule of law, and we'll talk about that later. But now, you know, when we look at the most recent survey, I mean, we see that the number one concern of the countries of the 600 members is, you know, economic recession. And that's that 80% of the members said that that is their number one concern. And I'm sure that if you ask business across, you know, all countries in which they operate, that is their number one concern. Will consumption, you know, go down, you know, so greatly that their business models will be impacted not only for 2020 but much beyond. And in some industries, as you know, Peter, there's a question whether those industries will ever recover. So I mean, obviously, you know, first of all, I want to say it's not just a Ukraine issue, that there are short-term effects that concern business that are the same across, you know, all countries. But in terms of Ukraine, I think what we're not so worried about is important. I mean, we are not facing the kind of macroeconomic questions that we were when we had $5 billion of reserves in the NBU foreign currency reserves. I mean, we've got almost 30 billion now. So that's very important, is that the monetary stability is there and extremely important to preserve, including the independence of the central bank. And we all know that that's crucial. But obviously, Ukraine faces, in terms of the short-term, long-term, a inability to really deploy the kind of fiscal measures that we see the neighboring countries deploy. And I think that's something that you know, very few talk about, but it's very important. I mean, if we look at countries that surround Ukraine who can spend 15% of their GDP to stimulate their economy, we're not in that place. I mean, we cannot spend 4 billion to 20 billion that we're seeing Poland, Hungary, Turkey, Georgia, other countries that are close to us and that can, as you say, can turn into tigers in terms of manufacturing and taking advantage of supply chain disruptions. I mean, you know, fiscal stimulus matters. It matters, you know, how much you can put into the economy now in order to catalyze growth later. So that is a issue that is Ukraine specific, that is of concern, is that, you know, you have 17 billion in debt repayments this year. You have 13 billion next year. It looks like we're out of the woods in terms of the IMF support and ability to access capital markets with the recent 2 billion euro bond issue, the longest money that Ukraine has ever been able to place, 2033 maturity, 7.25. So that is good. We'll close the gap this year, and I believe we'll comfortably close the gap. But those funds cannot be diverted into, or cannot be used to stimulate the economy, and that's something that is a concern in Ukraine, and it means that to take advantage of the opportunities that you're talking about, whether it's supply chain opportunities or where we see booms, the IT outsourcing, e-commerce, taking advantage of increased interest in Ukraine. That's very hard to do without those fiscal measures. That means that basically Ukraine has to put its best foot forward as a compelling investment destination, and that goes back to all the same things that we've been saying all these years: rule of law, trust, transparency, political will. That's what Ukraine has to do. The structural reforms that hopefully will lead to double-digit growth over the long term, and we need to see that happen.
We do need to see that happen. It's topics that we always come back to, Elena, whenever we discuss what's happening in the Ukrainian economy, unfortunately.
Well, that's the thing. There is no silver bullet. Peter, you and I both know that Ukraine has not mobilized the foreign direct investment, and let's just call it investment. There's a lot of this, foreign investment, and let's ignite domestic investment, and that's more important. Let's just say Ukraine needs investment. Ukraine needs investment, and whether it comes from international investors or domestic investors, the country needs it. We look at in general, I look at nominal GDP, real GDP, back in, let's see, back in 2008, the nominal GDP was 180 billion, shrunk to 91 billion after the crisis, 2014-15, and then up to 154. So we're not even back up to the 2013 levels of 180 billion. And now we have the impact of the health pandemic. So definitely, if I am advising the Ukrainian government, I would be saying leave no stone unturned to ignite structural reforms and to do the heavy lifting that brings investors confidence in rule of law, trust, transparency, and political will.
Absolutely. It's that ability to build trust with investors, and I agree it needs to be more broadly. It's not just about foreign direct investment. It's about how do you get the whole economy moving and quickly.
That's right.
And that requires confidence across the board. And with that in mind, given that Horizon Capital is a deal maker itself, we've obviously seen a significant fall in M&A activity in the first 6 months as well. What do you see as the outlook? Clearly, what's your appetite as Horizon Capital for investment, and what do you see from the other investors that you speak to for the second half of the year?
Yeah, I think we're in a privileged position. We're in a privileged position as private equity. As I mentioned, that huge 1.5 trillion of dry powder. Everybody understands the private equity cycle, that there's a 3 to 5 year investment period, and then divesting of those assets. So across the globe, you have GPs who are in one part of the cycle where they're investing, and others where they're divesting. So deals are going to happen. Deals are going to happen regardless. Obviously, the first half, you have a slowdown as people absorb what is happening and take their decisions accordingly. For us, there wasn't a slowdown. We continued. We made another investment. We'll announce another investment this week or next week. But we continue to invest. I think we're a bit of an anomaly. In general, for this year, definitely second half, I don't think is going to be much better. I think, globally and certainly in Ukraine. But everyone is priming themselves for a 2021 rebound. And I think that does make sense. And there are certainly the conditions for that. In terms of Horizon Capital, look, when we raised our latest fund, we raised it post 2015. So we started in 2015. We closed it in, really had a first close in 2017. We're oversubscribed, expected to raise 150 million. We raised 200. We've been putting it to work since December 2018. We're over 60% invested very quickly. And for us, all of the thesis that we believed in, the thesis, the hedging, any potential currency devaluation, hedging against macro risk, all of that is sound and true today. So when I look, we've always backed visionary entrepreneurs. We're providing growth equity. We're looking for these strong leaders, strong companies. We put an accent on export champions, and export champions are doing phenomenal. We put an accent on domestic champions, e-commerce, pharma, etc. They're doing phenomenal through this downturn. We have always stuck to our knitting in terms of the thesis that we've sold to our investors, and we didn't stray into special situations or distressed opportunities. We stick to what we're good at. Mid-cap growth equity, 70% is export champions, 30% domestic, and we've got a very strong tech focus. So about 50% of our assets in our latest fund are tech focused, and I think that has served us well, because clearly, Peter, IT has become such a growing sector. It's over $5 billion last year. Yeah. It will continue to grow. When you hear $6 billion this year, and the new Ministry of Digital Transformation wanting to see the industry grow to over 15 billion. You look at the people IO, you see the GitLab, Grammarly, those big financing rounds. Those are success stories for Ukraine. So look, I think that these are interesting opportunities, and you don't have to change what you're doing if it's going well for you, if it's in line with your thesis, and when you're already in top quartile performance for your investors.
So there's 2 points I'd like to pick up on with you there, Lena. First of all, I completely agree about IT. It's one of the sectors where we have and we continue to see a lot of interest right through this current phase of the pandemic. Yeah. But first of all, so building on that, so e-commerce, we've clearly seen a big uptick in e-commerce during the pandemic. What impact do you think this is going to have on the dynamics of deal making in the second half of the year? Do you think that's going to help to fuel activity as people try and scramble to A, change their own business model, or B, move into a new dimension?
Everyone's talking about Allegro in Poland, the #1 e-commerce champion of Poland, and a potential 12 billion IPO. E-commerce is extremely hot, and not only the general e-commerce, the Amazon type, the national champion e-commerce, but also niche e-commerce. We just did a deal, invested in a company called Makeup that is e-commerce, specialized e-commerce in beauty products. They're across 14 geographies. They're started by incredible Ukrainian entrepreneurs led by CEO Serhiy Volobyev, and they're doing fantastic. They're using a combination of this, hunger and entrepreneurial spirit of this young generation, this new generation of Ukraine, where they're not satisfied with only conquering Ukraine. They want to go regional, global. They want to put their footprint, far and wide. So, this company, you look at it, it's just amazing. 200,000 SKUs, 2,000 suppliers. Over 14 geographies. And we're very honored to be the largest financial investor in the capital structure for this company.
I have actually read, quite a bit on Makeup recently after your investment. So it's good that you've mentioned that. You've also used the word champion a few times already in this interview to describe companies in particular sectors. Can you give me what you'd perceive as being the key characteristics of a champion in a particular sector?
Yeah, look, we've been calling the entrepreneurs that we back champions. We call the companies that they have created champions. For us, it's a privilege. I mean, we think that Ukraine has a plethora of visionary entrepreneurs, and we seek them out. We look to back them. We take minority stakes. Peter, I'm not ever going to convince someone who's number one in their market, who's expanding into 14 countries, whose company is on a tear, that I can do better and I should control it. I mean, that has never been our premise. I mean, we look first and foremost for people. That's the number one, is the vision entrepreneurs. They are champions. They see themselves that way. They are extremely competitive, have very high vision, very high goals. And for us, it's important. It starts with the people. It starts with the team. It's obviously their execution, their business model, their ambition, their drive, what they intend to achieve, their growth strategy, where we can be helpful. And that's very important for us. It's not just capital, it's expertise also that we contribute. That's very important. I mean, at Horizon Capital, when people ask, how do you deal in this crisis as a CEO? You don't start when the crisis hits. I mean, Horizon Capital has been lean and mean and full of top deal professionals for years. I have always looked for people who are the strongest, the best, who are very competitive. I mean, we have this, Peter, we have this internship program where we look at people, and again, we're not looking for expats to drop in here who don't know the region. We're looking for people who grew up in this region, who have deep networks, who have peers, who know the lay of the land. And we also want to see them immersed in Western culture. We want to see them go abroad, do their MBAs at Stanford or Harvard or Wharton, University of Chicago, Booth. And then we bring them back and we look at, over 23 interns that interned with us resulted in the top 3 deal partners that we have today. So, I mean, it's very competitive, and those kinds of people are key to attracting the kinds of investments that we make, because you cannot, you look at Genesis, one of our most exciting deals, Vladimir Mnogolitny. There is no way that Vladimir is going to want to be partners with someone who's not as intellectually with it as he is. It's not about capital. He can get capital. Mm-hmm. We want to contribute value-add projects, strategic projects, be lockstep with our visionary entrepreneurs who we back. And to do that, you have to be able to keep the pace, and you have to be respected by them. And that's extremely important. It's not an investment for us. It's not just about, what's your business model. It is first and foremost the person. Before we made the Rozetka deal, Denis Kavantsev, who's the deal partner or senior partner, he spent 3 to 4 years getting to know, the Chichotkins. Before 2015, we were able to strike a deal to enter Rozetka, and we are the only financial investor alongside the founders. That's an incredible privilege for us, and it's been quite a ride with Rozetka since 2015. They're doing phenomenal, as you know, number one e-commerce, merged with Evo, another amazing success story. They operate 4 marketplaces, 4 countries marketplaces. Nicole Polyenko, extremely strong, extremely bright, very good entrepreneur, very good leader. And it's all about the people for us.
The people and the trust that you have with them.
That's right.
That's right. Before you invest.
And during this crisis, it was so interesting because when we looked at our latest fund, we'd done 10 investments and we color coded, green, yellow, red,
mm-hmm.
How difficult this crisis would be for them. And out of 10, we had 3 in green who actually benefited from the effects of this crisis, and 7 in yellow, none in red, and all doing very well.
That's good to hear.
Yeah.
So let me just let's come back to one of your other comments as well. Clearly, investors want to see an independent national bank. I think it's safe to say that the world has been watching closely with developments with the National Bank and also with what's happened in the renewables industry, the change in the green tariff recently. What's your perception on what the long-term impact of this is going to be on investors and their perception of Ukraine? And have you seen any change in their stance over the last few months?
Yeah, you know, again, as the chair of American Chamber of Commerce in Ukraine, obviously we're front and center on all of these issues. Our mantra is very clear. I mean, it is rule of law, rule of law, rule of law, trust, transparency, political will, and that has different angles to it. But if you go to the renewables, I mean, we have been saying from the very beginning, and that this has got to be mutual consent. It relates to the sanctity of the contract, that the way that the renewables investors are treated, who are over 80% of the investors since 2015 were in renewables. So over 80%, you have almost so many international institutional investors who invested in that industry, whether in wind and solar projects, you know, shorter term or long term. But really, we have said very clearly that how the renewables industry is treated will impact concessions, privatizations, Ukraine's investment environment in the long term. You know, we were very actively involved in trying to get consensus between the three major associations, renewables associations, before the green energy vote. The memorandum that was signed with the Prime Minister was with two associations. So we tried to bring all three together, and also to get another 5 associations on board, and to get the view out to the parliamentary deputies before the vote was taken. We are waiting to see. I mean, clearly the view was give solar 2 more years in terms of the extension, the project extension, the term extension. That's what the majority of solar players were asking for. That only got 47 votes in the Rada, so that did not go through. We are happy to see that it was raised, that you know, that view was taken seriously, but it you know, it didn't have the votes. So we'll see. I think the most important aspect is to get liquidity, and that's critical. Is that by and large, these most of these producers haven't been paid since March. I mean, they've been paying 5 to 10% of what's been owed. The arrears are over 600 million. I think close to 700 now. So, you know, it's not okay. You know, if you weren't paying, finally producers agreed to haircut. What solar wanted wasn't everything that they wanted. Okay, but a green energy bill has been passed, and was passed with the required votes in Parliament. So now Ukraine has to pay up, and that's important. And you know, we believe, you know, obviously there's a liquidity issue. Obviously, Ukraine has to come up with novel ideas. And it's interesting because it does link back to the National Bank governor, because Kirill Shevchenko was the chairman of Ukrgazbank. He knows the green energy. He knows the renewables projects very well, because Ukrgazbank financed many of them. So, I mean, we think that the solutions lie in novel ideas, in ideas like green energy bonds. You know, we saw Poland do a 2 billion sovereign last year green energy bond. You know, Ukraine has the law was passed. It may not be, you can't make everyone happy. This is my view. You can't make everyone happy. We have what we have. Now Ukraine has to start paying the producers and come up with a liquidity solution over the long term that will mean that we're not back to the drawing board in the near term. So obviously you know, you can tell by my comments, even though Horizon Capital never invested in green energy, we're not in any renewable project. It was never my PPM. It was never an investment memorandum, and we would not have pursued it, because that's not what we raised the funds for. But at the same time, it is so important to investor sentiment that both personally, I've spent a lot of time on it, and also as chair of American Chamber of Commerce in Ukraine.
I think it's going to be interesting to see whether or not the debt is A, repaid over the 18-month schedule, and B, whether investors are willing to take that risk of waiting for that period, or they seek to go to arbitration. And that's going to be the challenge over the next few months, I think.
Yeah, that's right. And Ukraine has everything to say about whether that happens or not, you know, and every move that they make, you know, the green energy bill, in the end, the worst possible thing would have been what many were advocating: kick it to the fall. I mean, that would give, again, that would be catastrophic for those investors to wait yet again, wait through an October election, wait till November, December, have no clarity, you know. So look, they put a peg in it, and now it's time to deliver.
Absolutely. Yep. At least investors now know what they do have to deal with, and can see what the impact's going to be on their investment. Let's hope it pans out for the best. Me too.
And the Prime Minister and the Cabinet Ministers, they now know what problem they need to solve, and they have the tools and mechanisms to do it. So let's watch and hope that happens.
There definitely seems to be a lot of momentum building in government around the green bonds as well. So let's see how that moves forward.
I mean, I'm a fan of that idea. I think that you have to look at sustainability, that it's not enough that to take 20% of the budget and to pay renewables, and you know, clearly nobody wants to see tariffs. You know, no government wants to increase tariffs for the end consumer in order to pay renewables. I mean, that's a political hot potato. You know, I mean, it's, if I'm sitting in the government's shoes, I can appreciate why they feel that way. But at the same time, you can't drain the budget. You have to come up with creative solutions, and those solutions are based on investor trust and being transparent and looking at novel approaches that other countries have taken. You know, Ukraine, with the latest $2 billion bond issuance, it was oversubscribed. There was a lot of interest. They do have market access. They can tap those markets at a reasonable price, and I think that that's what they should be focused on.
Yep. Let's hope that the investors will be looking to invest into the green bonds of Ukraine. And you mentioned also clearly the Horizon Growth Fund 3 is focused on fast-growing and particularly export-orientated businesses. So outside of the traditional mantra that's put forward of Ukraine being brains and grains, which other industries or export-oriented industries would you typically focus on in terms of your own investments at Horizon?
Yeah, I mean, we've especially, you know, Ukraine Invest love to say brains and grains. We always said brains, hands, and grains. So we were always saying brains, hands, and grains. And for us, the export champions that we like to back is IT, light manufacturing, food, and agro. So definitely, we think the light manufacturing is exciting, has a huge potential upside. We invested in Ajax. I'm sure you saw that, the home security manufacturer, you know, who, I mean, I love what they always tell me, that they now secure 500,000 homes from Norway to New Zealand, 93 countries that they export their product to, and it's manufactured in Ukraine. It's a home security software. Everything, the box, everything, the components are manufactured in Ukraine. It's shipped from Ukraine throughout the world, and we're really excited about kind of that marriage between manufacturing and a high-tech product. We think Ukraine has all the potential to develop more of those businesses, to support more of those businesses, and we certainly are looking to provide equity to more of those businesses.
So Ajax is a great example of global advertising for Ukraine's ability to move into every market in the world.
I agree. 93 countries. It's quite
amazing.
An amazing success story. It's an extremely fast-growing company led by a visionary entrepreneur, by Alexander Konatovsky. He's very strong, very passionate, and very driven. And that's really the key to the success of the companies. I mean, Peter, I keep saying it all the time. Without those entrepreneurs and the founders who've created these companies, we would not be where we are, and we certainly wouldn't be looking to provide them with growth equity.
I'll come back to the point on entrepreneurs a little bit later. I've got another question for you, but let's move on to keeping on the theme of IT, to digital acceleration. I mean, I think we've all seen, from remote working to the growth of e-commerce, that COVID-19 has helped to accelerate the digital first mindset amongst many individuals and businesses. What lasting effects or challenges do you see that remote working will have on companies and their employees, and including Horizon?
Look, I think remote work is here to stay. I think that there will be part of companies, functions, departments that may not return to the office, where companies will see that those individuals, those employees are just as productive and maybe even more productive, without the commute, with being able to focus. And I think remote work is here to stay. And that's something that everyone has to accept, because how long, whether we're going to have a second wave. I mean, we can already see in Ukraine, the numbers have climbed. The numbers have climbed since the lockdown was relaxed in May. I mean, we're at around 85,000 cases and almost 2,000 fatalities, and we are not even in a second wave. When we talk to some of our investors, I mean, they've already told their staff they will not be coming back to the office until spring 2021, at the earliest. Yep. So I think remote work is here to stay, and what is important is from my standpoint is really the role of each individual in managing within that context. That this is a new world, that everyone must be digitally savvy. Everyone needs to understand how to communicate in various forms, whether that's crisply through a Zoom call or a message through WhatsApp or Telegram, etc. I mean, everyone is using all kinds of various platforms to communicate. The keeping up that communication is key. I mean, we almost immediately set up. I mean, why we didn't do this before, I don't know, but we did all of our top CEOs of all the portfolio companies. We did one big chat where we shared everything that we could. So we had our deal partners with the top CEOs. We had, and we did webinars. We asked McKinsey partners. We asked health ministers. We asked people to do webinars with our CEOs to provide them as much information as possible, and encouraged rapid communication. Anything anyone had their hands on, and they instantly uploaded to 20 plus top CEOs throughout the country. So I mean, that's important, is that communication and having that data at your fingertips is key.
Yeah, it's I think it's brought about a added benefit for all of us in terms of the way we can communicate. I mean, I think there's also the other challenges, which I think it'd be good to hear your views on, is how it impacts on a business in terms of the way it's going to manage its people and help to deal with some of the things like the lack of social interaction, the impact that can have on people's mental health, the new responsibility that brings to an employer beyond what was previously there. I think that's a new challenge you'll have to face up to.
Yeah, that's right. That's right. And it's managing up, managing down takes on a completely different meaning. You're not going to see someone around the cooler. You're not going to be able to say, in the lunchroom and say, hey, how are you doing? And let off steam, have a coffee with someone. I mean, that's, actually what we are hearing is that people are working more and harder than they ever did. They've taken all the time that they spent on commuting, all the time that they spent on business lunches, all the time that they spent, on just having a chat with their colleagues. And all of that is being spent on, phone calls, web meetings and working. And yeah, I mean, we have a weekly coordination call that we have every single Tuesday where everybody's on the call, everybody speaks, everybody talks about what their priorities are. We firmly believe focus is power. We believe that you really can't do more than 2 to 3 things well at any given time. So everyone is encouraged to have really what, their big goals, but also for the next 30 to 60 days, what they are working on, the 2-3 initiatives that they're trying to move forward. We have our weekly partner meetings, we have investment committee meetings, we have happy hours where we try to, we have town hall meetings where we have everyone in the company on the call, and people are encouraged to not just to sit and listen to me go on and on, but also just to talk to each other, to share what they're thinking, what concerns they have, and yeah, we found that we have been able to stay in touch, to communicate, to move projects forward, to keep really our finger on the pulse of what's going on in the companies and what's going on with all of our employees. And Peter, I mean, a big thing for us is we were always this is part of the DNA of Horizon. We always said that we're on the ground in Ukraine. We are on the ground, and we are not flying in and out, and you can't invest and manage relationships flying in and out. And boy, is that true. I mean, you think of it, I can't imagine being a CEO of a private equity firm if I was stuck somewhere in London or Connecticut or Moscow or Warsaw and trying to invest in Ukraine. It's not possible. I mean, that's, yep. Going back to our, what hurts M&A the most, it's people factor. It's the fact that people can't go and kick the tires. They can't, if you're looking to buy something in Ukraine and you are in Europe or you're in the US, even getting on a plane to come and do due diligence, to talk to the management team, to do what people typically do when they're spending $100 million plus on a transaction or more, it's hard to do it. It's hard to do it with travel restrictions, with people's fear of flying and getting COVID on the flight, etc. It's hard to do. It's a human factor. It's a human factor that didn't exist. 2008 financial crisis, it wasn't a human factor that hurt M&A. It was a people factor. It's that decision makers, M&A directors are not getting on a plane and flying and looking at targets. They're not looking at companies in the way they can look at a virtual, data room, but can they go and sit down and have a coffee with the CEO that they want to back in the future and get comfort about the business they're buying? That's very difficult to do. And we can do that. And that's the thing, Peter, we can do that. We are taking full advantage of that. We have no problems going to terrace. I have no problems having a meeting. And throughout all of this, we've been very strict on hygiene, mask wearing, screening, self-screening. Everybody fills in an app with 14 questions before they can walk into the office. Everybody was tested before they can walk into the office. People are discouraged from flying and from every business trip is scrutinized. Do you really have to do it, or could you do it virtually? But at the same time, throughout, we've been the proponents that you're sheltering in place, but you're sheltering in place. If 2 people can walk around in the park, you can meet with with one of the founders while you're doing that. Or you can meet, or now, less than 10 people, of course, you're not with 10 people, but do I have a problem with going to Vino Cucina and sitting across from one of our founders? Absolutely not. If I'm 2 meters apart and I'm having breakfast with them, lunch with them, no problem. So, I think that kind of closeness, the proximity to people, to deals, that's important. because everyone there was this big push, this big move that you don't have to be anywhere near. You can always take a plane, overnight flight to anywhere. And now I think the local offices, regional offices, they really do matter.
Absolutely. It's definitely been a big unwelcome change for myself, not having to take so many flights, that's for sure. But it does remind me of a dinner I was having with CEO last week, and I did say to them, does this mean that the summer terraces are going to extend into winter? Because we're all going to now be meeting in our coats with heaters outside.
I think so. I think they'll all have those like screens and heaters and all that kind of stuff, and we'll still be sitting outside. Absolutely.
I think it will keep the restaurateurs happy as well. It'll give them an extended season to catch up on their lost profits. And just keeping on the digital theme, I mean, for you both personally and with Horizon Capital, what's been your biggest challenge around digital transformation?
Look, we spent, fortuitously, the last year, we spent a great deal of time and money in terms of making sure that all of our systems and processes were in order. We implemented SAP, we transferred everything into the cloud. We have, we were ready. I mean, we were ready. So if it was a few years ago, we may not have been as ready with the servers in the office, the way we were configured, the way we were set up. So I mean, literally, we in March, we went immediately overnight remote. And the challenges really are ones that you've mentioned, not traveling as much, or, psychologically, not being able to see people, that kind of thing. But in Horizon, it's been very seamless. Also, we are fortunate because our, 50% of our investments are tech focused. We have access to some of the leading minds in the country in terms of digital transformation. We've backed Intellius, which is one of the top companies, 1,500 employees, and they're one of the top mid-sized service providers, and they're very strong. So I mean, Data Group, which is number one broadband cable provider, and very strong cybersecurity, very strong with in terms of systems and processes. So I mean, we've been able to piggyback on so much of what our companies and the founders are doing. So yeah, so in general, I can't say that we were caught in a difficult position.
I think I think it's been good timing, and a lot of companies have obviously been very very happy. I think that likes of Microsoft and others have been willing to provide their services, such as Teams, for free of charge during this period, so they can really upskill and mobilize their workforce. So without it, I think it would have been a great challenge.
Peter, we were already using Microsoft Teams, you know what I mean? So it wasn't, it was, I mean, it wasn't something that we've never, I mean, I think, look, the biggest issue for us is, we had, in May, we had, our latest fund, we had the board of advisors meeting with our LPs. And, that we're very much looking forward to them coming to Ukraine. They come in May, and we had all these plans to show them portfolio companies, to show them new deals that we've done, and we're doing it virtually. Okay, it was, and as you know, I mean, you may take a day to spend with your investors, and nobody wants to spend 4 hours on a call. So you're compressing everything that you want to tell them into, and the same thing with our AGM. We now have kind of like, during our AGM week, we have our signature dinner that we invite investors in the business community, top business leaders, our portfolio company CEOs and founders, and that's become a highlight. People are every year asking me, oh, are you still doing that? We can't wait to be invited. And this year we're going virtual in November. So I think that's disappointing because we enjoy seeing our investors, we enjoy showing them Ukraine. We think that, we really believe that they have to see the country, because if you only read what's in the media about Ukraine, then it's not always the best side to it. It's not the best face, but when they come to the country, when they see the construction cranes, when they see the kind of this new generation that's tech savvy and smart and ambitious. I mean, it really gets them excited about the country and the opportunities.
I couldn't agree more. I mean, it's one of the things I do spend a lot of my time doing, is trying to promote the real story about Ukraine, and not what people unfortunately read in the press.
That's right.
And unfortunately believe too much of what they read in the press as well.
Yeah, that's right.
And just so on that topic, for you, I mean, who do you think are going to be the biggest winners and losers in terms of the shift to digital first economy, and also consequentially has an impact of the pandemic?
Yeah, I mean, obviously, looking at Ukraine, looking at our markets, e-commerce, absolutely, specialized e-commerce, and the sky's the limit. I mean, there are so many potential disruptor models that you can back. So, I mean, that's absolute. Online education, yes. IT, whether product platforms, whether digital solutions providers, digital transformation providers, we think that's exciting, and we've done a deal in that area, and we'll continue to do more. Then manufacturing, I think that Ukraine really has an opportunity. I mean, I don't want to see Poland take advantage of that opportunity. I don't want it to become the tiger of the East. I think that we can do that. I think that we are nestled, we are neighbors to the huge EU market. We have a very good access to Turkey as a market, to the Middle East, to Asia, and we need to capitalize on that. We have to capitalize on this manufacturing opportunity, because I think when we talk to banks and they're talking to their clients, they're saying every single one of my clients is looking at whether they need to change their supplier, whether they need to make significant changes to their supply chains. And that's an opportunity, and Ukraine needs to pursue it, as quickly as possible.
Absolutely.
Otherwise we're going to become a remittance economy as Ukrainians work abroad and send money home and help other neighboring economies develop their capabilities. And I prefer not to see that happen. I want to see it happen here.
I think this is a critical time of opportunity for Ukraine, given its strategic geographic location, its rich history in terms of innovation in manufacturing, and with the high quality of workforce, educational quality of the workforce that we have. I think it's a critical time to try and take advantage now.
Yeah, and I mean, we were talking to a major kind of auto parts manufacturer, and although the auto industry is suffering during this time, at the same time, every crisis, I mean, it's a breakdown leads to breakthrough, and people are thinking, let's think in advance. Let's think in the next 3 to 5 years, how can we make our manufacturing processes even more cost competitive? What can we do in terms of IT? What can we do? Where can we harness the talent, the AI talent that we need? So I think that we have answers to those questions, and we need to capitalize on this.
Absolutely. And just coming back to one of your earlier points about the strength of entrepreneurs being critical for businesses. For you personally, who is it in terms of a leader, an innovator, or an entrepreneur who you really look up to, and why is that, Lena?
Okay, I mean, I have so many, but seriously, these are the people that run the companies that we've invested. I mean, I have enormous respect for Vladislav and Irina Chechotkin. I have enormous respect for them. I read Jeff Bezos' story, how he started his business in a garage. They started Rosetka in their apartment, and I look up to them immensely. I can't, they are the #1 e-commerce champion in the country. I mean, they are metrics-wise, as strong as Hepsiburada in Turkey and Allegro in Poland. And they have nothing to be ashamed of. They're fantastic. You know, I look at Vladimir Mnogolitny, I look at Alexander Kontopsky. I mean, I seriously admire these people. I think that to start a business in a country in Canada where I'm from, or EU, it is so much easier. You have so much support. You know, you have all of these different business programs. You have incubators, accelerators. You have you know, Israel spending 900 million, almost $1 billion to fund startups, and they know 90% of them are going to fail. You know, these entrepreneurs are on their own. They could go anywhere, and they choose to build a business here under difficult circumstances. It's like a cactus in a desert, you know, and they're super strong and resilient, which makes them perfect to take over the region and the world. So, I mean, I admire them more than I admire, you know, Elon Musk or Jeff Bezos or, you know, or anyone like that, because they are in constant crisis mode. They need to be top of their game every single moment and never relax. You know, I think that's an enormous, because they have things thrown at them that you don't see in other markets. You know, they can have the rug pulled out from them from a legislative standpoint. They can have the enforcement agencies, you know, all of a sudden decide to turn aggressive. You know, all these things that, you know, a court case and a court system that isn't free and fair. You know, this is the environment that they're operating in. So I take my hat off to them. I think, you know, they're fantastic. I look at, you know, the Jubal founders. My God, you know, Roman Prokofiev, Eugene Sobokaryov. I mean, they built the number 2 in the world after Indeed job aggregator site. I mean, that's amazing, from Ukraine. Or, you know, Mnogolitny at Genesis. You know, you've got, I mean, you know, I was pretty impressed when TechCrunch wrote that it's a coup for a Ukrainian company to dominate 6 African markets, 300 million consumers from Ukraine, powered from Ukraine. I mean, I think there's going to be more and more stories like that, because these people are in their late 20s. They're in their, well, some are 25, 26. You know, the Better Me founder, Victoria Deepa, she's in her 20s. What is she going to do when she's 35 and 40? It's, you know, I mean, really, these people are amazing. They're my heroes.
The amazing potential they have, and I think one of the key words you use there is their resilience, because it takes a completely different skill set to, as you say, build a business and make it thrive in this environment.
Right, and they're not withering desert flowers. The smallest little thing, and you know, in this crisis, they have, you know, business is on its own. Business is on its own. They are not getting, like in other countries, everyone isn't getting a stimulus check so that they can stay home and feed their families. They have to work to feed their families. There's no handouts. You know, they've got to figure it out. You know, everyone, all of the companies that we invested, I mean, they looked instantly. They're looking at CapEx optimizations, cost optimizations. They're looking at you know, how they stretch payments, how to access financing. I mean, it's actually quite interesting right now what's happening in terms of debt financing in Ukraine. That it's becoming affordable. You know, that loans that were over 20% in hryvnia are down to 11, 12%. That's a big thing in Ukraine. You know, so at the same time, you know, I'll throw in a plug for equity. You know, equity is key. Equity is key, and the capital structure can't be built on debt alone. You really, these crises do separate. You do see where the company is super over leveraged. It's very difficult to withstand. It's any disruptions to your business model, any disruptions to the top line. If you're taking a 30-40% hit, even if it lasts only a few months, and you're leveraged at 4 to 6 times net debt to EBITDA, you know, you can just disappear overnight, as we saw many of the big US retailers do. You know, here, you know, there's ways that they can survive, and they did.
That leads nicely on to the last topic that I'd like to cover with you, which is trust and sustainability. I mean, you've already talked about there some of the characteristics of successful leaders. Do you think that you know, the impact of COVID-19 and disruption to business models is changing you know, the key skill sets that a leader needs? And if so, how do you think that's changing?
Look, I do think that what is different about this crisis is it has a health angle to it. And maybe in the past, some leaders may not have thought about their employees, you know, but when it's a question of life and death, which this pandemic has raised that question, and sadly, many people have lost their lives, it forces leaders to rethink everything. And I think that everyone has to answer for what kind of leader they were during these past 6 months, and that they will be going forward. You know, were they the people who put their employees into a risky situation that maybe didn't need to be risky? You know, did they show their leadership in terms of wearing masks, insisting on screening, on doing everything possible to show their employees that you know, they're walking the walk, not just talking the talk, and that they care about them. You know, I was surprised when many of the people at Horizon said to me, "We thought you would want to be in Canada. You're Canadian. We thought when you were offered the ability to fly out and to take your family, you would." And you know, for me, it was really important. You're here, I'm here. You know, I'm going to do everything possible to ensure that not one person at Horizon contracts COVID, that not one of your family members contracted. We will do everything possible to work with you in terms of making it as comfortable as possible, and I think that's important, because I think that not every leader acted that way. You know, not every leader, and when push came to shove, what did you do and how did you do it? And I think that's really important. So you can't clear that record, either good one or poor one. You can't, you know, people see and people know, you know. So look, but that's one thing, because health and safety, you know, and we plan to talk about ESG, and we plan to talk about how important all of that is. But I think that has taken paramount importance. And when leaders realize that, you know, they can't safeguard themselves and leave their employees exposed, you know, we're all in this together. No one knows who coronavirus is going to strike down, you know, and I think it's brought people together in a way that maybe wasn't the case before. But look, in terms of Horizon, you know, in general, at Horizon, we're very mission, vision, principles focused. That continues, and that's very important. You know, you wrote a few of the questions that you wrote was about short-term versus long-term. That's important. People need to see. People are dealing with these short-term issues, but they also need to see the long-term light at the end of the tunnel. They need to never forget what the big KPI is, the big, hairy, audacious goal, as we call it, the BHAG, is. And I think that helps you get through the tough times. You know, you're working 24/7 alongside the founders, and I know so many of our deal partners and deal professionals were doing that. And they always kept first and foremost what kind of the big vision was while they're battling the day-to-day. But, you know, I think I'm a big fan of stop, start, continue. I think that the more people can stop worrying, worry is a waste of emotional reserve. There's nothing you can do. You can't be worrying that, this thing is going to strike you down. You have to, I minimized looking at websites, minimized all kinds of, what's happening with coronavirus, how many new fatalities, how many new cases, watching all these video clips about that really could drive you crazy. I think, you can't be obsessed with endless COVID-19 coverage, and certainly, I encourage everyone to stop doing anything like that. You can't distract yourself. For me, I definitely encourage, starting anything that helps you focus more. I mean, I started a great workout program that I've been delaying for years during the fundraising. I traveled to 30 countries, 300 investors, kept putting off, but this is, doing these things that renew, unleash your creativity, renew, raise your energy level. I mean, that definitely. We continue the way we operate, which is focus is power, leave no stone unturned, the kind of extreme priority setting. And during this whole pandemic, what I resisted was micromanaging. And I think any leader, any CEO, when there's crises all around you, you can fall into the trap of, I need to solve it. I need to get in there, and trusting the people around you, trusting that they are fully capable and are handling the situations. That's paramount. And that's why I say, you can't start hiring great people when a crisis hits. It really, it cemented in me the belief and understanding that everything that we've done over the last 5 years has enabled us to really shine and to support the companies in the way that we're doing today, that it really exceeds my expectations.
I think if you invested the time up front during the good times to prepare yourself,
exactly.
That's when the team galvanizes and you reap the benefits.
That's right.
And that's when the trust and be trusted ethic comes into play. You're absolutely right. You can't micromanage everybody in a downturn. You don't need to. That's right.
That's right. And you see, you see as a CEO, you see how people are performing. You can see, you don't have to be sitting in their room while they're remote working and be watching what the results are. You see the results. You see it. You see the deliverables, the KPIs being met. So.
And then just coming back, because you mentioned how micromanaging and not having trust can be a big impact. But similarly, in times like this, how quickly can a CEO gain or lose the trust of both customers and employees? What are the other big factors which you think are important?
Yeah, look, overnight as we see, we always talk about internally that reputations are built over decades and can be lost in 5 minutes. For us, what was clear, very important for us is that we were instantly engaged, that we were working shoulder to shoulder alongside the founders, that they could count on us. We were here. We were accessible. We were there for them. We looked at every issue, and it was a joint problem that we solved together. And they knew that it wasn't this number is 5% off or 10% down. How about you tell me how that can happen? We know why it's happening. We're in there with solutions, with people, with augmenting their team, helping them close, key positions. We also looked at this as an opportunity because some companies in crisis, their top talent is looking elsewhere, and we capitalized on that opportunity. We brought in, more 10 to 20 new hires for portfolio companies, dream candidates that we've been watching, that we saw an opportunity, and we've got a HR director who was able to bring them into some of our top companies. I mean, we think that it's not just, you know, there's M&A that was done at the portfolio company level, where some of the competitors were struggling, and our companies are strong and well capitalized, and we're able to come in and close the deal. So by and large, I mean, this was part of what's been happening these last few months as well.
And you mentioned yourself about the short-term and long-term, you know, balancing between the goals. I mean, what for you do you think is important in a crisis between, you say, managing for the immediate impact of a downturn and keeping your focus, as you said, on what's at the end of the tunnel? I mean, how do you do that in Horizon?
Look, I mean, we're extremely decisive. I mean, that's very important. You know, if we look at kind of this new normal, being decisive, really also trusting your intuition. It's an art and a science, investing, and you've got to have both. Leveraging your network, that's extremely important. And look, I mean, we right now, you know, if we look at Horizon, we've brought in over $2 billion through these 150 investments of debt and equity. We have our goal, $3 billion. We want to be an over $1 billion fund. We're looking at this next fundraise. We're already talking about it and what it would include. We do expect to start that process in the near term. And that keeps people excited. I mean, people are excited about the fact that we're already, you know, over 60%, almost 70% invested. They're excited about the fact that because of the founders' efforts and our efforts alongside them, the companies are growing, you know, over 40% across the whole portfolio, top line CAGR over the last 3 years. That's tremendous. You know, we're excited about how well we're doing you know, from our investor perspective. We want to be not just top quartile emerging Europe, we want to be top quartile period for our investors and stay there. So I mean, that keeps people excited, that big kind of picture. Mm-hmm. that because for all of our deal professionals, sourcing, adding value, exiting, you know, we offer all of it. You're not just doing one little piece as an associate somewhere. You're seeing the full picture, and that creates huge adrenaline and momentum and a lot of, you know, inspiration, motivation within the team. So I mean, we make sure that that's front and center all the time while people are handling what may not be the most fun part of their job.
So, just probably move on to the last question, Lena, because I'm conscious of the time. We've overrun a little bit, but it's always good to talk with you. I think, you know, one of the other things we've all clearly seen during the pandemic is that, you know, Mother Nature has shown its ability to heal the planet when mankind isn't quite so active. Do you see that the whole environmental, social, and governance agenda is taking shape here in Ukraine? And if so, what impact do you think that's going to have on investors?
Look, I mean, for context, for Horizon Capital, I mean, you know that we started by managing a U.S. government fund, Western NASA's portfolio, 150 million. So you're managing U.S. government money, and then you also have IFIs in your LP base. ESG for us is in our DNA. I mean, you know, that has been critical. It's part of our decision-making process. It's part of due diligence. It's part of, you know, we have a full-time compliance manager who used to work at IFC, who's part of our team and is a very important professional within our group. So for us, this is important, and we have, and these are standards that we follow throughout every single fund, and that we report on a quarterly basis, and that we need to ensure goes into our decision making. So we definitely want the environment to catch up with where we are, right? So I have the pleasure of serving on the Ukrainian Corporate Governance Academy. It's a fantastic organization. Its intent is really to foster and educate and promote corporate governance. We just issued, very exciting, the core code of corporate governance. And I'm sure, Peter, you know all about this, and this was just issued last month, 140 pages. It's a great document, and while it's targeted at public companies within Ukraine, we are also saying it shouldn't just be for public companies. It should be for all companies in Ukraine. It should be for state-owned enterprises. It should be for anyone who cares about corporate governance. So I think it's starting to gain steam. I think definitely we see the backing of, EBRD and USAID and IFC and World Bank and IMF. I mean, this is a very hot topic, not just at state-owned enterprises, but throughout the corporate environment. And look, I think, to wrap it up, Ukraine is part of a global community, and these companies, clearly, the ones who want to be regional champions, global champions, I mean, this is baseline now. This is not something that is elective. It's something you do or you do not. If you want access to finance, if you want access to global markets, if you don't want on social media for the founders to be labeled as destroyers of the world, then you better get on board.
Absolutely critical, not only, as you say, for investment, but also for consumers. And I think, we now have we're standing at a crossroads here, because more and more entrepreneurs will be focused on the ESG agenda in their startups. So it helps to drive it from the bottom up. And as you say, now we've got the government being more focused on the agenda as well, plus investors like yourself and the IFIs. Let's hope we're going to see a sea change.
I hope so too.
So Lena, I just want to say thank you very much for your time. It's been really great to have this conversation with you. I've really enjoyed it. Learned a lot more about you and about Horizon, and look forward to speaking to you again soon.
Thank you, Peter. I really appreciate it, and we will definitely speak soon.
Thank you. Take care.
Bye.
Bye-bye.